Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly trading plan webinar. So I want to welcome everyone. And as you will see, the presentation was upgraded a little bit changed. So I also put some information about myself. So for those of you that don't know me, my name is Simon Friedman. I'm the Senior Account Manager with AvaTrade. My professional experience go back to almost 22 years when I started as a professional prop trader back in New York City. And since then, I've been mentoring and educating traders, and currently I'm doing a job as account manager with AvaTrade. Just for those of you who think that, that's a lot of experience, yes, it is. But I have to be honest with you, market conditions are changing. The whole world is changing. So I'm currently or constantly educating myself, learning new things, trying to adapt to the new conditions of the market. This is the agenda for today, and that's a normal agenda that we're following. That's we're going through indices, stocks, commodities, and the Forex world. And of course, just to remind or to explain to new people that visiting us for the first time, the whole idea of this webinar is to help us create a little bit of a structure, a plan, and I always say you plan the trade and then you trade the plan. So it makes things a little bit easier, to say the least. And we usually start with the big picture, and the big picture is pretty much the same. Unfortunately, the war is still going on. The world is trying to put a lot of pressure on Russia, adding a new round of sanctions. Apparently, it still doesn't work. The war is continuing. There's still people dying, unfortunately. Now we're starting the earnings season, and the companies are starting to report, and we'll be going through some of them today for the first quarter. There's still a lot of uncertainty as far as how the markets are going to react to the Fed's policies and increase in interest rate. And in the latest meeting of FOMC, they announced there will be selling assets with the rate of, I think, 90 or 95 billion a month. And that created a little bit of panic on the market. We'll take a look in a moment what's happening on the market. And these are pretty much the highlights. So again, we have the war, we have the interest rates, we have inflation that the Feds are trying to fight with by bringing all those measures in. There's some concerns about the real estate in the States. The States getting really hot, and there's some thoughts about markets being overbought as far as the real estate overpriced, and that's not a good sign to remind us 2008. I just want to share with you also how you can keep in touch with us with the social media. You have Telegram, AvaTrade Official. You have Twitter, AvaTrade at AvaTrade, and YouTube, of course, where we're constantly adding new webinars, new material, educational tutorials, and so on. It's a great resource for you to educate yourself, to be on top of what's going on. Okay, let's move on to the terminal. Before that, as usual, it's good to remind us about the risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 72% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you're more than welcome to see the full disclosure statement of AvaTrade.com. Let's move to the trading platform. And this is the MT4 for those who are curious what it is. So I want to start with equities, and we'll move to the S&P 500. And just to give a little bit of an overview for the last week, all three indices sold out. Dow Jones was the strongest. It fell only 0.3%. It's pretty much a flat week. It's more or less the same closing for the four weeks. That's very interesting. For Dow Jones has been very steady here. S&P 500 give away 1.3% in the last week, and Nasdaq was the weakest one. It lost 3.9%. Is the worst week since January of last year. So a lot of selling in Nasdaq. The techs. Now, what does it mean? What does it mean? The Nasdaq, as we know, it's 100 stocks. Most of them technology stocks, and we'll see in a moment some individual stocks. But one of the things that the Barron's is talking about, there's a slowing demand. Besides everything, there's a slowing demand for semiconductors. So some of the stocks, AMD, Nvidia, Intel, they cut their target prices, and it's really creates a lot of down pressure for those stocks. So as we're already on Nasdaq, let's take a look at some big players there. Take a look at Google. I'm going to turn to daily chart. It's a free fall for 4 days. Free fall on Amazon as well. Apple stock is selling off. Now, I'm going to go to individual stocks in a moment. I just want to go over the indices. Just bear with me here. So Nasdaq is the weakest one as technology is selling off. Dow Jones, as we said, is the strongest out of three, and S&P is selling off over here. Now, what to expect the upcoming week? Let's take a look. S&P as a neutral one. We'll go to regular chart over here. So just to remind everyone, this was the level from which we sold. We came back. It looked like, okay, we were out of the woods, and that's actually when the analyst said that we're out of the 10% correction and so on. Everybody got excited, and then we dipped right below it, and then we're selling off over here. So what to expect? As we said, there's a lot of pressure. We trading below the previous week, and now it could be that the space is open for continuation to the downside, and potentially we could continue this week to the downside, the upcoming week, to around 42.60 level. This is the level from which, with the confirmation here on the support, we made the high highs, and that was back in October of last year. So there's a possibility that we will continue going lower here. Of course, there's going to be a checkpoint around this level. If that's the scenario, we might have a little bit of a support here, or maybe a strong support at this level here, which is 43.82. That's about $100 lower than we are currently on S&Ps. So we'll be watching. Of course, we'll be watching for any news coming out, and we'll go in a moment and see the economic calendar and trying to see if anything happening in that department. So let's take a look at economic calendar. Actually, on Monday we have Bank of Japan Kuroda speaks, and that's, of course, we'll be focusing on Japanese yen. We'll go to it in a moment as well. We have consumer price index, the inflation from China reported. On Tuesday, we have, I'm trying to see if anything important here. We have unemployment rate from the UK. We have CPI numbers um, from Germany. We have ECB survey. We have consumer price index. That's a key information that the Feds are following very, very closely. That's the CPI numbers from the states. And that's on Tuesday. Wednesday, we have interest rate decision from New Zealand. And take a look, the previous 1% and the consensus 125. So they are expecting a little bit of a rise in the interest rate from New Zealand. It's important to be prepared for that. We have CPI from UK. Again, we have Kuroda speaking on Wednesday, and we have interest rate decisions from Canada on Wednesday. And Thursday, we have employment data from Australia, interest rate decision from ECB, retail sales. This is very, very important figure this time. As I shared with you last week, there was a slowdown in consumer activities. So this figure will be very important for everybody to see. Of course, the Wall Street want to see how the retail sales are going. And we have a press conference from ECB, and we have a Michigan consumer sentiment on Thursday. Now, just to remind everyone, what I do take here, I just take the high impact events. There are more events there with the medium and low impact. So I always recommend that you spend some time, prepare yourself for the week by looking at economic calendar and paying attention to the instruments or to the countries, the announcements that really connected to the instruments and markets that you are trading, and make yourself note, reminders, and so on. Okay, let's switch back to the MT4. So we said we have a downside pressure on indices, and it might continue in the upcoming week. And let's take a look at European indices. This is DAX. Thursday and Friday actually went higher, and trying to figure out some levels here. So we're sitting on the level from which we had the support before going higher. We right back to this level. So again, if U.S. market continues lower, as we know in the global economy, we might see continuation to the downside on the European indices, including DAX. FTSE has been very, very strong. And in my opinion, FTSE is the most real index from all of them, and I'll explain why. If you take S&Ps and we take a look at, sorry, one second. Okay, so we take a look at this drop. This is the COVID or Corona drop that happened back in February, March, and then we had the recovery. And take a look. We did have a little bit of a hard time breaking through it on a few attempts, and then we just skyrocketing higher. For whatever reason, the Wall Street was strong. As they say, we have two separate things. We have Main Street and Wall Street. All the, I don't know, I call it nonsense, but again, we kept on going higher, and we actually very close to the highs as like COVID never happened. Again, this is my personal opinion. You shouldn't take it as your own or make decisions upon it. I'm just sharing with you what I think. And if you back to FTSE, if you take a look on FTSE, we had a drop. One second, I'm just trying to see why my chart is not showing it for real. '21. Okay, take a look. FTSE dropped on corona fears, dropped very heavily, right? This was the drop. And now, as of Friday, we're actually back to the pre-corona tops. So it tells me, okay, we dropped, we recovered, but it was a nice recovery to the pre-COVID levels. And yes, this was the drop right here in February, in the mid-February. We we went through it, and the normal levels a little bit pre-corona, a few weeks before corona, and this is very important. That's why I say FTSE is the most truthful one, because it didn't have this out of proportion move to the upside based on whatever the reasons they make up. Okay, so I just wanted to bring that to your attention. So FTSE, we back to this level. It's very, very serious level. We most likely will have some kind of resistance, especially if the global markets are falling here. It was a very nice recovery, up and down a little bit, but it's been very, very strong. And now it's very important to see what's happening at this level, 76.27. This was the level right here. 76.29 and a half. So let's say 76.30. We hit it, we stop a little bit lower, and we'll be watching that. So that's FTSE. CAC 40, not that strong, the French index. And let's take a look at China. China had some issues, still continuing having issues, and it looks like we are holding this level here. We can't break it to the upside, so potential we might continue to go lower from here. Nikkei, similar idea to the US indices. We came to this level over here. We tried to go higher, we're right below it. And this was on Wednesday, the drop. Thursday and Friday, we didn't do much. So we'll be watching. If we were to go lower, we want to break the Friday's low. And if not, we're probably going to be trading in the channel until we break either down or the upside to 27,592, the level over here, or 27,590, 27,600 to the upside. So that's it with indices. As we said, a lot of pressure, a lot of negative things upcoming, and the markets are feeling the downside pressure on the equity side. So let's see what commodities are doing, because lately it's been working in the opposite direction. If the risk on, that means the equities are rallying, the commodities would sell off and vice versa. So we'll start with gold and take a look. As the market was selling, gold finally got off this chair that's been sitting around 1913. We couldn't break. We had few tails kind of going below 1900, but this was pretty much the channel that we've been trading in. So as a lot of accumulation happened here, as you could see in a tight range, we might see now the attempt to break to the or to reach the top of this range. And this was the March 24 level, was 1966. And let's see how we act there. If we face the resistance, we might start going lower and playing the channel. If we break through it and start showing a little bit of a support here with closing on the daily chart about this 1966 area, we might continue to the upside. So that's gold. Palladium. Palladium has been selling off after this crazy run to the upside. Sorry, this is platinum. So we're already in platinum. Let's see if it's gonna play catch up with gold. Sometimes they go together. So as gold moved higher the past 3 days, platinum had a 2-day advance, and we might see continuation to the upside if gold continues. Now I meant to bring the palladium, and for a reason. Take a look. This was the resistance, and then we built a very strong support, and with the war starting in February 24th, the palladium moved up really, really crazy. And then we had a sell-off. We came to retest these levels, moved higher, went back below, and we established a support here at 22.12, right here at these levels where I have this line. And then on Thursday, we closed above it after the attempt to go lower. We closed above, and then Friday move was a very strong move, and we hit exactly the resistance over here. This level is 26.06, and we closed on 26.570, so 26.06. We'll be watching what's happening next. In order to go higher, we would need to show some closing price action here about this level, about 24.06. And if that doesn't happen, we might be ranging for a while until we shoot either up or down from this channel. So palladium, very, very important. Now, crude oil, that's a similar thing. After this crazy move with the war, we came below 100, then we played with it, we went back to 116, and then we back to below 100. Thursday was a low day, which confirmed the previous low over here before the bounce. So the Thursday low was 93.84, a little bit below $94, and then we are experiencing a resistance of 98. So we need to start closing about 98 for oil to continue to the upside. Now there's a lot of issues. We still have Europe buying oil and natural gas from the Russian Federation. A lot of pressure being put on them, but it still is happening. So we don't really know how this week is going to play, especially after a few sad events that were discovered uh, with the war. So the world community might put more pressure on Europe. They might really cut off themselves from the Russian oil and gas. I really don't know. I'm not really pretending to know what's going to happen. Nobody knows. So as of now, these are the levels around 98. The oil is playing there. Natural gas had a super crazy move up, and we spoke about it on a weekly basis. As each level, they took resistance and turned into support and so on. So we did hit these levels over here around 6:30. We went higher. Friday was a very strong day for natural gas. The high was 6:53, and then we came back. We're sitting on 6:30 support. Again, we might continue going higher. And if you remember, I showed you a monthly chart, which showed a possibility to breaking out of this resistance that we had 1, 2, and this is the third attempt. There's a huge possibility that we'll continue higher. And there's also a possibility, equal one, that we might slide from here to look for the previous supports. And if that happens, of course, from 6:30 we'll probably go to the 6 psychological level. But technically speaking, the 550 area is more likely to be a next support. We're not gonna guess. We'll just take one day at the time. And there's also a level over here around 586 that might be tested. So we'll take it one day at a time. As of now, it's been a very nice move up in natural gas for those that took risk in it. Copper is facing a strong resistance around 477. As you could see, it was here, 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 and once again, we can't break through it. So we might have another attempt should the commodities move this week. And we probably see another resistance here. As we know, the copper is the commodities being used in constructions, and is very closely connected to China. Sometimes I mention it, that if we see Chinese market bouncing to the upside, we might see the copper moving with it. But as of now, we can't break to the level, so there's a pressure on the Chinese market. And even though there's a supply issue because of Russia with copper, but demand is also limping a little bit. So we don't really see a lot of upside pressure. Every attempt to break through this 477 is really failing. So that's as far as copper. Now, soft commodities had a nice week after consolidation. If you take a look on wheat, we broke through the support of 1044. Then we didn't really fall much. We came right back to this level, and Friday we closed above. So this is a signal that potentially we could start resuming this upside move on wheat. There's a lot of shortage or potential, let's say, a potential shortage of wheat because of the war, as Russia and Ukraine both are suppliers of the wheat globally. And corn, similar idea. It was ranging for a while. We should see some moves either breaking to the upside or breaking to the downside, because it was a very, very long consolidation or accumulation here of corn. Even soybeans moved in the last week. So the soft commodities are in the play. So let's just summarize commodities here. We have oil and natural gas on the upside. At a nice week, we might continue further. We have gold and metals bouncing from the range to the upside, and the soft commodities are on the move as well. Okay, so we went through indices, we went through commodities. Let's go to individual stocks and let's take a look at a few of them. We spoke about Apple last week. I mentioned to you that JP Morgan took it off of a focus list. And of course, it's not just because of that. The stock sold out. And we are focusing on the 167, 168, 169 level support. And if we're holding it, we might continue to the upside. If we break through it, it opens space for continuation to the downside of Apple. Now, there's some speculations that Apple is going to have kind of a subscription for the telephones, that instead of buying a telephone, you can just subscribe to the 2-year plan and just every 2 year change the phone. It's not confirmed, but some analysts are talking about it, and they say it could be positive for the Apple stock. So we'll see what happens there. Now, we have Tesla also sold out last week, as the Chinese plant is still being shut down because of COVID, and the analysts are saying that there will be a strong effect of that for the company. So we see the continuation to the downside, possibly the upcoming week if the markets continue selling. Of course, we'll see even Tesla, the strong stock, will be selling with it. Twitter, the story with the Twitter, that Musk took a big chunk of the company buying stock. We did have a nice move higher with the gap. Now we are on the move down. There's always a possibility that we'll try to close the gap on Twitter. If not, this 44 level resistance, it could be a support. So the 44 level will be watching what's happening there. As we said, Google and Amazon are selling off strongly. The big names. AT&T stock, it's very interesting. This is not the first time I'm mentioning it. When the market is selling, the stock's really holding. So we are kind of facing this resistance around 24. And just to remind the AT&T, besides everything else, them and Verizon, they're really the key players in 5G business. So this was the fall, and then we went lower, we came right back, and 24 we're really trying to break it to the upside. So if that happens, we might see a nice move of AT&T. It's just technical observation that caught my eye. Now the banks, I want to bring up the banks, and actually these are the first ones that are reporting next week. We have JP Morgan reporting on Wednesday. And take a look. After this drop, we made a nice recovery here, and then we came right back, made a lower low, and then Friday is a strong day for JP Morgan. Goldman Sachs and Citigroups are reporting on Thursday, similar price action over here. So again, some analysts are saying because of Russia and Ukraine and everything else, it's not so positive for them. But on the other hand, the interest rate and other things to do with Feds potentially could be positive for the banks. So at least technically speaking, we might see a little bit of a bounce here on the banks in the upcoming week. Again, it also will depend on the earning reports that are reporting in the upcoming week. So these are the banks. Facebook, let's take a look at Facebook really quick. We came to 229, 230 area. We really tried to go higher. We couldn't. The market sold out. But even if Nasdaq selling, losing at 3.9% in the week, Facebook didn't really do much. He had an upside attempt, but it failed. So again, there were a lot of excitement of analysts that, if you remember, I mentioned to you a couple of weeks ago that 200 was pretty much a cheap buy, and the jump on Facebook took it up to 229 to 30 area. So let's see if they are still thinking that Facebook is a good value. If not, we're probably going to go and retest 209, even 200, possible to the downside. And let's move to Forex world. Dollar index, very, very nice move. We were ready for that, as you know, every week we spoke about it, that as we kept them moving higher with our support, we started with 96, then 98, then 99, and that was obvious that at some point we're gonna hit 100, and we did. And what's next? I would like to know that as well. There's a possibility of continuation, of course, as interest rate decisions are on the horizon. And the next increase is happening on May 5th. And take a look. There's a possibility it will be continuing. Of course, it's going to be profit taking, it's going to be consolidations and corrections and so on. But as of now, we moved our support from 98 to 99, and 99 is holding nicely, and it's very, very positive for dollar, what's happening. And let's take a look what the majors are doing with these things. We have euro dollar sliding lower here, as you could see. Pound, with the weakness of the pound, we seem to be holding this strategic 1.3 area, and I think it's going to be a lot of fighting over this level in the upcoming weeks. In the euro dollar also, we're holding this recent low. Let me just mark it with a level. 108 is a key level or next level for retesting to the downside. Now dollar yen after this nice correction, we are on the move higher to retest the highs. So of course, this recent high here that we touched on 28th of March was 125.10. There is a possibility of retesting it, and as you saw in the economic calendar, we have Kuroda speaking from Japan. Maybe we'll hear some news as far as the actions of the central bank and so on. So it might change the situation. But as of now, the yen's been really, really weak as the dollar is getting strong. And of course, a 10-year yields are moving higher and higher. So the yen is the kind of a key component that we'll be watching on what's happening next. USD CAD, after sliding here in the beginning of the week, we recovered nicely, moved higher, but this level, 124, 125 is a key level of support. And also we have a decision on interest rate from Canada, a lot of announcement. And of course, we'll be watching what the oil is doing. As you all know, that Canadian dollar is very sensitive to the price of oil, as Canada is one of the producers. So as of now, on a big picture, we have a range between 125 or 124 and a half and 128 and a half. It's about 400 pips range, and we've been playing with it for a while. As you could see, we dropped from here, we held again, we came to confirm it, and again, and let's see what the upcoming week is bringing us in that direction. And let's take a look at ruble. Ruble is really funny. As you know, Russia just, I think, defaulted on the repayment, and S&Ps are saying that the Russia is really on the edge of a default, and the currency is very strong because they do their own manipulation and things the Central Bank of Russia is doing. They're playing with ruble and pegging it to gold and so on. But as of now, you could see that we came to 76. This is even pre-war levels, and really unknown. And it's really hard to say. I mean, logically, the dollar should be even higher than the highs we hear, 120, 130, but they've moved artificially to the downside by playing this game, saying that the countries should pay in ruble and pegging to gold and all the internal work they do there. But for those traders that are taking risk here, we spoke about it on Friday. It was a move higher, then we made lower moves again, and we're sitting at, we hit again 76. Again, for some traders, this is a bargain, as they know the ruble is going to fall or continue falling at some point. But this is the situation here. We made this crazy move because of the war. The war didn't stop. Sanctions are growing, a lot of pressure on Russia, and it's just starting to affect them in a very, very heavy way. And the ruble is back to its strength. Doesn't make sense, but that's the situation. Okay, so before we go, just take a look at the crypto world. Bitcoin is also somehow it's really following the equity markets, and it goes against the dollar, which also makes sense. As you could see, we tried to break to 48 and potentially go higher to the highs. Market refused that, and now we're trading at 42 and a half. Again, we might go retest it again. We might go lower. It's very hard to say, as the crypto market is very unpredictable. It's very sensitive to what regulators are saying, to what investors are saying, to what the people that tweeting are saying. So as far as technically, we are trading between 40,000 and 45,000. Why I'm saying 40? Because right here we held, and from here we start a higher high. So 140, or sorry, 40 or 41,000. It's kind of a next support, and the next resistance is back to 45. Okay, everyone. So I want to thank everyone for attending our webinar. The upcoming week, as we said, a few events. We have a downside pressure on the market. We have potential move higher on the commodities. Dollar is getting strong. And I want to wish everyone a successful week. Stay safe, stay healthy, manage your risks, and be positive. All the best.